Hi, I'm Pattu from freefincal. In what can only be called as a bizarre move, the government announced an amendment to the budget, and this was passed in the House this afternoon. So, from 1st April 2023 onwards, we shall have a change in taxation status of non-equity mutual funds. And in fact, my understanding is there will now be three types of mutual funds: funds holding 65% or more of Indian equity or Indian equity ETFs. These are the equity funds from a taxation point of view, and there's no change in the taxation of these. Then you have funds that are holding less than 65% of Indian equity, but more than 35% of Indian equity. And I would like to now call them as non equity funds class one. And these will be taxed in the normal way as the debt funds used to be in the current financial year. That is, the short-term gains would be taxed as per slab for units that are less than or equal to 3 years old, and for older units, the gains will be taxed as long-term capital gains. That is at the rate of 20% with indexation, cost inflation indexation. The big change is that funds that are holding less than or equal to 35% of equity will be taxed as per slab. That is, the gains from funds that are holding less than or equal to 35% of equity will be taxed as per slab, regardless of the age of the unit. So we can now call them as non-equity funds class 2 with respect to the taxation point of view. And this change in rule is applicable only for fresh purchases that you make from 1st April 2023. So all your existing units in non-equity funds, they will be taxed as usual. The short-term capital gains will of 3 years will still apply. It will be taxed as per slab, and then you have LTCG tax of 20% with indexation. But also, you can also make fresh purchases between now and March 31st. That will also be taxed as per the old rule, and your existing units will also will not be affected. Only for the fresh purchases, the units that you purchase on or after 1st April 2023 in funds holding less than or equal to 35% of Indian equity, they will be taxed as per slab regardless of age. So this is a big development, and of course this is a negative move, because people who are taking risk in the bond market by investing in a debt fund, they will not be compensated for it, because there are funds in which the NAV can fluctuate quite a bit. There's interest rate risk to worry about, there's credit risk to worry about, and the investor will not be compensated for it. Of course, there is some benefit still compared to FDs when you invest in the long term for debt funds, because in an FD you are paying tax on the interest gained every financial year. Then there is TDS, and you have to show it in the ITR, and you have to pay tax on it. Whereas in a debt fund, you are still paying tax only on redemption. So there will be some benefits, some minor benefit, even if you are paying tax on the gains as per slab when you redeem the debt fund. But still, it is not adequate compensation, in my opinion. Of course, we can comment about this is wrong, that is wrong, government is doing this and all that, but that is not going to help us in a productive way. So what I would recommend is that first you just wait and don't redeem anything. Just wait and watch. I think the AMCs will appeal to SEBI to modify their investment mandate to suit these requirements. Of course, it's not freely possible now because of the um, change in. Um, excuse me. Let me just get that right. Because of SEBI categorization rules, it's not freely possible for mutual funds to change their investment mandate. But I think the AMCs would appeal. Uh, they may probably even appeal to the government, but even if the government doesn't listen, they will appeal to SEBI, and hopefully SEBI will lend an ear and make some tweaks to the categorization rules, and there will be changes in the investment mandate to accommodate at least a small fraction of the categories, because there are many categories. For example, liquid funds, overnight funds, not much can be done about them. But well, that is it. So does this mean I should change my investment strategy? I don't think so. I don't think we should change anything. We should I mean, I would say just wait for some time. Let's just wait for what the AMCs do. and we'll take a call as per that. I'm writing an article tomorrow on what SEBI can do to help, but we will we will take a call. There's no hurry to rush and do anything. Let's wait and watch how things progress. Bye bye.